Hey there, YouTube subscribers. Welcome to my channel. Anybody that's been following along knows this channel's about stock market analysis. We talk about, I've been bearish for a little while and interested in gold. And we've been calling this market kind of the play-by-play. Pretty good so far. Accurately caught this down move. And you'll see it once I get into the charts. But go back and watch my video yesterday, my last video, and that'll give you the idea of kind of how I called this drop here. What I want to bring up for everyone is it's kind of meet your maker time in the stock market. And what I'm seeing is the fact that we're basically breaking all kinds of support. And if we don't hold today, then there's not much support left in the bull. I mean, there really is no more bull market. It's a bear market, or will be, relatively soon. And let me show you what I'm seeing here. We'll start off with the SPY. The SPY chart. We'll go to the weekly since we don't have a. Sorry, they throw ads up on my charting program all the time. I use TradingView, it's free. All right, so here's your weekly. If this week holds down in this level, we've got just further confirmed selling. The bull market, like I've been saying for a while, was dead back in 2018. And the reality is that our trend line that we had, the bull market trend line, which is this purple line going all the way back to 2009 lows, was broken right here in 2018. And that's when I said, okay, the bull market's over. And a lot of people didn't believe me because 2019 was the entire of 2019 and first part of 2020 was kickback rally time. But that happens. When you break trend, you can have a kickback rally or back test before the trend, the broken trend continues downward. And that's exactly what we're seeing as of now. And very impulsively as well. We're seeing big impulsive selling candles and big gap downs, trapping all the bulls. All the long money from 2019 is just getting completely obliterated, basically. And they're getting trapped as well. They're getting caught in these big gap downs, which is trapping that money, not giving them an opportunity to get their money back. So that's bear market action. Bear markets trap the bulls. They do it either through gap downs or they do it through kind of deceiving rallies where markets will rally, making them think that the sell-off's over, trapping more money, and then they'll gap down at some point in time, trapping all that money. So that's what we're seeing. And the point is, I've been saying for, really since 2018, the bull market's dead. We broke the technicals right here. All we've been doing is back testing. And what did I say in many, many videos? I said, look, if we get up to this level, up to this trend line, that's a screaming short. I think that's a great opportunity to short. You can go back and watch my videos. I say it all the time. So that's exactly what I said, and sure enough, I was 100% right. So anybody that has been haggling me over the last year and a half, I think you owe me an apology on that one because I'm pretty much right. So on that one, price is truth, and the price has vindicated my my bearish demeanor in all of 2019. Because from the highs we are down, as of right now, we are down, as of this morning, we were down almost 20%, which is a bear market. We ducked it just barely, and we're down 17%. So, we are back to the 2018 levels. So, 2 years of gains, all of 2019, all of 2020. So in the first part of 2020, gone within just a couple weeks. So that's bear market action. I'll be looking for those apologies in the comments. Next, moving on. So so this trend's broken, all right? The chart's broken. The technicals are broken. We've got confirming bear market action. We've got volume spikes. Everything tells me bear market. The only thing that's kept the market from not collapsing even more is the fact that the triple Qs has not broke its trend. Well, as of today, before today, let's put it that way. Here's your bull market in the tech sector. This is FANG. This is essentially FANG, the FANG stocks. And, we basically have held. We broke it just briefly, but it recovered instantly. And once it recovered and recaptured, it just held within trend. So you just take that data point out because that was just the Fed reversal right there. But we don't have a Fed reversal anymore. We don't have the Fed that can reverse from hiking rates to cutting, from tightening or shrinking their balance sheet to growing it. We don't have a Fed that can do a 180 like that, and we've now broken trend as of today. So meet your maker time is the fact that if we can't recover this support line today, which we could, maybe we do, but if we can't, then basically we've broken that trend, the bull market trend in the tech sector as well. And at that point, pretty much there's nothing holding the market up. It should just completely collapse into a bear market. So let's watch for that. I'm eyeballing this today to see if we can close. Oftentimes they will try to recover it, and they'll dip below. And that's what I said. I figured we would probably. I figured if I roll up to the hourly, I figured in my last video I said, look, we're probably going to gap down. We're going to wash out a lot of stops down around this 195, which was my profit target. And I covered at the open today, but I've gotten short, and I said, look, we're probably going to do that, and then we're going to run up into a back test, fail at that back test, and start to roll over into the next bear market. And that's exactly what I've been calling for. That's exactly what I'm seeing as of right now, and that's why I covered at the open. We ran up right into resistance right here at that trend line that I just pointed out, reestablished the short, and now we wait for this thing to fail and roll over. So far, these candles have failed. We tagged it, failed, and started to roll over. So it should continue lower. Now, I don't know if we're going to break the lows today, but, I figure we'll probably have some sort of selling action into the close, potentially. Setting us up for more pain here in the future. So if you're complacent, then get ready to experience a bear market is kind of what I would say. A lot of people have only experienced a bull market. A lot of people have only been trading for, the last 10 years, and they don't know what a bear market feels like or looks like. They all say they're going to be long-term buy and hold sellers for the long term. And that's easy to say when you're in a bull market, when every single dip has been bought and the buy the dip crew comes out every single time and you continue a bull market trend. But when that fails and you experience what a bear market really feels like, you'll see capitulation in a lot of these guys who said they're long term. They'll take a big hit and they'll panic sell. It happens every time, and that's why you get panic selling, because a lot of people that thought they could hold through the lows just can't take the pain. So regardless, I am short still. Covered this morning, reestablished a short, still short, looking for confirmation that we are going to head lower. So continuing to look for that. Let's jump over to, I did grab a little bit of this one, this FUN. So far it's not working out, but we'll see where it ends up. There's a lot of momentum to the downside, so to catch the very bottom or try to catch a support is a little tough. But here's the trend. This is still, I figure, still going to go into a bear market, so we could easily go a lot lower, but it's just completely fallen off a cliff. Usually when you see moves like this, you'll see some sort of a snapback, and that's what I'm looking for. And on the daily, this is the weekly, we've got support right here. You can see it, weekly support right along here. And we fell right into it, breaking it intra-week, but I think probably by the end of the week we'll have recovered this. Could be wrong. It's not a huge position, but I'm looking for that to happen. And it pays about a 10% dividend with the most recent drop. So, like 10% on my money for a longer term thing is good. And kind of that's how I'm playing it. The market's not going to go down forever, but at the same time, the market could easily drop into a bear market and not recover for 20 or 30 years. A lot of people have recency bias and think that the stock market will recover. It'll drop, it'll recover, it always does, always has, and that's not true. It doesn't always do that and hasn't always done that. It's only done that in the last 2 bear markets or recessions because the Federal Reserve has been there to drop interest rates at least 5%. They did that in the dot-com bust. In 2007, 2008, they did it, but that wasn't enough, so they had to do a bunch of QE. Now, they don't have rates. All they have is QE. So if they're going to save the market, they've got to come out with massive QE. They've got to announce it sooner than later, and it's got to be massive QE, and that's it. If they don't do that, we go into a bear market, then we don't recover, okay? And we drop 20, 30, we drop 30, 40, 50. I don't know how far we drop. We drop far, okay? And we don't recover for 20 to 30 years. Go back and look at the Great Depression and how the stock market performed after the Great Depression. And it didn't break even. The prices didn't get back to even for 20 years, I believe, 20, 30 years. So stock markets don't always just do a V bottom and they're in a bear market for a year and a half and then they V bottom and come back. That's not how it works. Look at the Japanese Nikkei, and in 1989 their stock market crashed. It's never come back since. So America's not special, all right? A stock market is a stock market. You have market participants, you have central bank involvement, and the Nikkei is no different than the U.S. The only difference is we have the world reserve currency. And on that note, let's look at gold. All right, gold sold off a little bit last night in the futures. Again, we're seeing this. This is forced selling. This is people kind of trying to cover huge losses and other things by selling some gold. I don't know what it is, but the reality is that here's gold kind of just basing around, flatlining, basing a little bit after having a little bit of a sell-off. This is not an impulsive sell-off, though. This is holding. Buyers are stepping in and buying this. And gold is priced in dollars, so let's see how the dollar is doing. Absolutely plummeting. So the dollar is now reaching our price target of this lower channel. Been calling it for a while. I said, look, we're probably heading down here. Sure enough, here we are. So we're there, not quite, but close enough. We'll probably get a little lower, probably overshoot it and hold for the time being before, and then the Fed's most likely going to come out with a QE 4 or 5. I don't know what QE it is, but they're going to come out with some sort of QE, and the dollar should continue its downward momentum. That's the logical thing. So it's funny to see gold sell off, even though the dollar and gold's priced in dollars and dollars, tanking, and that makes no sense to sell gold. And usually when something doesn't make sense like that, then, just stick with your charts. Look at support. Gold is in a bull market. Gold is holding support. Little sell-offs or buying opportunities. Let's look at some of these miners. Okay, Barrett Gold, just basing sideways, basically flagging. It just continues to flag. So the flag, I had it marked here. Now we've got, let's just say it's this, because it's created this kind of flag now here. And so there's your flag. A break to the outside the flag sends us up to those price levels I've been talking about in the last few videos. GDXJ, this one's interesting. Actually looks like it's right at support. If I roll it out, there's your support. Looks like we're right there at support, so that one's interesting. I'll just, you guys can mark that out. This is an hourly chart. GDX, slightly below support. Let me go to the hourly here. Yeah, just slightly below support. So, it is what it is. I don't know where it's going, but again, gold's in a bull market. So, pullbacks to support should be bought. Support on the GDX, could be all the way down here at 25.35. That's possible. This one, we'll have to see where this thing closes out the day. NUGT below support. Not much to cover there. Sabina, SGSVF, right at support. Here's your support right here. So we're at support. So yeah, I might add a little bit to this one. We're at support. AEM slightly below support. We're just seeing a lot of these gold miners kind of below support. Newmont still above support. Here's your support right down here at 47 or 48 bucks, about $1 down. So maybe we get down there, but that's at support. Anglo Gold Ashanti above support. You know, here's your support. We dipped below it actually just recently, just barely dipped below it, instantly recovered, snap back. We're above support. This is just flagging, bull flag. Here's your flag up here. So look for this to break higher. Silver is getting dumped on again. Looks like it's recovering a little bit, but they gapped it down and then it popped up. Again, silver, being that it has industrial application, doesn't always play nicely with the dollar drop kind of bearish thesis. Sometimes silver can trade like copper and get smoked. So that's why I got shooken out of my SLV position a while ago, and I'm not back in it right now. So the point is, gold bull market, stocks most likely bear market, tech here's your tech rolling over some more, exactly like I called. I said, look, probably gonna come down to 195, do a back test, fail, roll over into the next bear market. This bear market has the potential to be extremely nasty, and that's just because the Fed doesn't have the tools that they've had over the last 30, 40 years. They've had interest rates. They've had the ability to provide stimulus to the market for the last 40 years, and they don't have that anymore. The only way they can do it is through quantitative easing, and the market's expecting that. That's why the dollar is just collapsing. The market's saying, okay, the Fed's going to come out and do a big QE program, and sure enough, we're getting the move in the dollar. So this has been my entire thesis in investing over the last couple of years: is we get a big market crash or some sort of move down, and that puts the Fed into play to create lots of money and do a lot of stimulus, creating tailwinds for gold and gold to miners to just skyrocket. And so the entire larger term thesis has been short the market, flip the shorts of the market into gold positions, and let those things run. And so far it's working out. So we're going to continue to watch to see if this continues to play out. But that's it for the video, everyone. I'm going to go ahead and cut it there. If I see anything new, I'll let you guys know. But I need some thumbs up, guys. I'm putting out some pretty good content for you guys, at least for anyone who's able to actively trade it. You know, there's been money has been made. Let's just put it that way. If you've been following my videos, so give me a thumbs up, and I appreciate the interaction. Thanks. Bye.